Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 10th, and just wanted to take a brief minute to discuss what markets did last week, as we did have a little pullback as the S&P 500 finished the week down 2.27% on the week. The mid-cap index, as measured by the S&P 400, was down 1.3%, and the small cap index, as measured by the S&P 600, was down even 1% on the week. So what has been driving this market action over the last 2 months has been a lot of momentum in the equity markets. And momentum has been driving the markets higher and has really been pushing us higher. And we've seen a lot of multiple expansion into the equity markets, with the S&P 500 trading around a 20 times earnings multiple, which is an awfully high multiple historically. Now that's okay as long as the earnings that we're pricing in for 2024 are expected to grow. It is okay for us temporarily to be at where we are, but just like valuation momentum, all things kind of come to an end, and that's what we're seeing here in the last week or so in the equity markets, is just a run out of the momentum that was pushing the markets higher. Not necessarily anything bad that has happened or anything that has investors scared. It's just we are now digesting the big moves that we've made over the last 2 months. And a lot of these moves have been made in the cyclical sectors, and you've seen a lot of outperformance in the equity markets from the cyclical sectors over the technology and consumer discretionary, the communication services. The two sectors that were driving us higher for the first half of the year are starting to go flat, sideways, and down a little bit, as you're seeing profit taking and you're seeing investors buying into the cyclicals as the fears of recession wane. A couple of things that we talked about last week and still remain: the 10-year Treasury is right around that 4% interest rate, which has kind of been a top on stocks here recently and in the last year or so. Has always been a top for stocks. But we also have to remember that mid-August through September is historically the worst period in the stock market for the year. It's seasonally weak. A lot of professionals are on vacation. A lot of people are on vacation, getting their kids back ready to school, expenses coming up, things along those lines are not as in, and therefore volumes are very light during this time, which allows for moves to be a little more volatile than on a normal trading day, just because the volumes are so light. But what we really feel is that we've entered into a sideways trading range here, as we're just digesting this nice big run up that we've had in the equity markets. I mean, the S&P 500 is still up 16%, over 16% year to date as of last Friday. And we're still seeing a lot of positive momentum in the cyclical sector. A lot of your industrials and materials are outperforming the equity market itself. It's just not enough to keep the indexes moving higher, because remember, 25% of the S&P 500's market cap is made up of 5 stocks. And when those 5 stocks are stagnant, or you're seeing some profit taking, as you've had some huge moves in them so far this year, the index is going to go sideways or down. But track the Equal Weight 500, the RSP, over the coming weeks and start to see if you notice a trend there of that being a little bit better, even on a negative number, than the S&P 500 itself. So what we see during this time is opportunity when we do have a little bit of a pullback here in the markets. If you've been sitting on the sidelines, as a way to get in before we enter into what is seasonally the most strong period, which is the fourth quarter for equities. So if you're on the sidelines, not sure what to do during this period, if you see a pullback and a nice opportunity to buy a stock or a sector or get into the market, go ahead and take advantage of that. Dollar cost average yourself into the market would not be a bad scenario for you to do. So as always, if you have questions about what to do with your individual portfolio or what we see moving forward, feel free to give us a call. We'd love the opportunity to speak with you, but don't miss out on that return of that momentum coming up soon. So as always, give us a call at 904-346-3460 or check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much.